All right, it's Tuesday. I'm here with your market update, and we've had some green on the screen. So I did a Wednesday update last week because that was the Fed announcement, and we saw a nice day that day, a big green candle, and kind of continued that pattern of going up since then. So we've seen a lot of improvement in the bond market, and basically we've almost carried all the way up to where that big red candle started. I'm going to throw up some charts here. So you've got the big red candle on April 10th where we fell out of that 101 to 100 range that we had been bouncing in, that I had been talking about. We fell through that floor of support. We've been down underneath it since. We have come back up over 100 and maintained that for a few days here. So that's really, really good news. You also see that big red candle. Hopefully you can see this little purple line, and I'll highlight it if you can't somehow. But that line right there is the 200-day moving average. And when we fell on April 10th, we fell below that moving average. Now we have come back up and stayed back up for a few days above that moving average. So that is a good sign. Those moving averages, that makes a difference. There's people that track that stuff, and it is a factor and kind of one of those ways to have some insight into what things are doing. So it is good that we're closing back above that moving average. Another little chart here, you kind of see that we're actually in between the 100-day moving average, which is that top line, and the 200-day moving average. So maybe consider that sort of a new range that we could see things bouncing around in. We'll see about that. But for now, we're in a better place than we had been, making some good recovery, back over 100. We'll see where things go from here. Stay tuned for more.